Welcome to the program. I'm Mark Imperial. This segment's being brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done to educate consumers, grow their practices, and to leave a legacy. We're doing a series of spotlights on remarkable advisors across the country. And joining me on this segment from Atlanta is Zach Morris. He's the co-founder of Paces Ferry Wealth Advisors. Zach, welcome to the program.
Good to be with you, Mark.
Zach, tell us a little bit about Paces Ferry Wealth Advisors and specifically who are the types of folks that you specialize in helping?
Yeah, sure. So a little background on Paces Ferry Wealth Advisors. We started in 2018, but prior to that, me and my partner with JP Morgan. Growing at a big firm for a while, we got to the point where we decided we could provide a better client experience and really define that client experience if we were to start our own company. So in 2018, we started Paces Ferry Wealth Advisors, and we were able to hit the ground running and being able to transition a lot of our clients from our previous firm. But the types of clients that we work with, Mark, are really the folks that are asking themselves the question, am I doing everything that I should be to set myself up for retirement? Am I on track? And what we can do for those clients is that we can put together a full financial plan for them and really show them the path to retirement and what that looks like.
Has anything changed? You know, we're recording this coming out of the pandemic, not quite out of the woods yet. Has anything changed as a result of the pandemic in people's minds or in actual strategy in financial planning? What's happened?
Yeah, that's a good question. So has things changed in people's minds? Somewhat. Should it have? I don't think so. And the reason why is because, you know, at the end of the day, Mark, the steady hands prevail, right? Anytime we have a crisis, people's expectations lower. They say, you know, if I could just get X percent or I could just get Y percent. As people get more and more comfortable, they start expecting more and more. But at the end of the day, really, you know, if people stick to their plans, they continue to save, and they don't take more risk than they could really handle or that they need to take in order to hit their goals, then they should do well through any type of environment, you know, post-pandemic or not.
For your clients today, are the questions that they're asking you any different than before, or what are the biggest concerns on people's minds?
I think the biggest concerns on people's minds are similar to pre-pandemic as post. It's just, you know, am I doing what I need to do to hit my goals in retirement? Am I saving enough? Am I taking enough risk? You know, a lot of people focus on the risk aspect of their investments. You know, a lot of people think that if they just took more risk, that they would be able to hit their goals quicker and they'd be able to retire when they want to retire. And typically what we're able to find when we put together a full financial plan for somebody is that a lot of times they can take less risk and still hit their goals.
Excellent. Great insight. So, you know, linked to that, to these people's desires and needs, are there any common misconceptions that you find people hold that are not necessarily true? What are some big misconceptions in your industry?
Yeah, that's a great question. So I think the biggest misconception really in the industry is around how people should invest their money and how much risk they should take. So the industry has really led people to think that they should invest to their maximum risk tolerance. A lot of times people are asked the same question 10 different ways to figure out how much risk they could possibly tolerate. And very little focus is given to their actual goals. So they invest to their maximum risk tolerance, and the plan shows that they can hit all of their goals in life if they do that. But you know, a lot of times that type of plan could overshoot their goals. So what people should do is that they should really only take as much risk as they need to take in order to hit their goals. Unless they just have aspirations to be the richest guy in the graveyard, I think people typically take more risk than they should.
When you start working with folks, do you find that people make a common, gigantic, you know, common big mistake in what they're doing financially, or are there any big pitfalls that you find people commonly fall into that they could avoid?
Yeah, I mean, I think that one of the big things that one of the big pitfalls is trying to chase the next hot thing. A lot of times when a retail investor, your common investor, hears about something and it's on the news and it's all the big firms are talking about it, people are talking about it. Typically, that's the worst time to invest in something like that. More recently with the talk about inflation, you have a lot of people saying, okay, how am I going to hedge inflation? Well, by the time that conversation is in the headlines, it's typically too late to do something like that. And a lot of times something like inflation, equities can be a hedge for inflation. If somebody has a 70-30 portfolio, technically they can be hedged against basic inflation. Also, having a balanced allocation to international is also a hedge against inflation because it's a non-dollar denominated asset.
Great insight. Zach, you gave us a little bit of your background in starting the company, but take us back a little further. What inspired you to even get into the field to begin with? How did you get started?
Yeah, that's a good question. So when I graduated from college, I worked at a bank for a year, and then after that, I took off and traveled the world for 6 months, and with the intention of coming back and working in this industry. Unfortunately, when I came back, it was the middle of 2008, and it was a bad time to enter the industry. So I worked for a startup company for 3 years, and then I met Jeff Diamond, my now partner, at JP Morgan, and that's how I got into it. I've always had the interest in finance. I always knew that I wanted to be successful, and so I majored in finance because I thought if I want to have a good understanding of money, I need to major in finance. I didn't know at the time that I wanted to be a financial advisor, but that kind of evolved through my career.
Excellent. Zach, before I ask you my last question, for folks that really know they need to get their financial houses in order or maybe procrastinated, don't even know where to start, what would you advise them on, like, what's the most important thing they should consider when looking for an advisor? What is that?
Yeah. So I think one of the biggest questions that you want to ask an advisor is, are you a fiduciary? Typically, the big firms adhere to something called the suitability standard of care. If it's suitable for the individual, then they'll buy it for them. The problem with this is that an investment could be suitable for an investor based on their age, net worth, and even risk tolerance, but it doesn't necessarily mean that it's in their best interest. So the fiduciary standard of care means that an advisor is obligated to keep the investor's best interest in mind. And that could be something as little as knowing that they have a liquidity need in the future because they're talking to the client on a regular basis. So they might not invest that extra cash because they know they need it. And that's a simple example, but it's just knowing what's going on in the client's life and taking a more comprehensive view of not just their investment portfolio, but their whole financial plan.
For folks with us today listening, if they'd like to speak with you, how do they find you, connect with you, and learn more?
Yeah, so the best way is you can look us up on our website. It's Paces Ferry Wealth Advisors. We have a bunch of YouTube videos. You can search YouTube Paces Ferry Wealth Advisors. But if you want to contact us directly, my number is 404-480-5059. That's my direct number. And my email address is zmorris@pacesferrywealth.com. And that information is all accessible on the website as well.
Zach, this has been terrific. I really appreciate you taking the time and sharing with my audience today, and I wish you continued success for you and for all of your clients.
Thank you for your time, Mark.
Zach Morris, he's the co-founder of Paces Ferry Wealth Advisors out of Atlanta, and this segment's been brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done, published, to educate consumers, grow their practices, and to leave a legacy. That's all for now. I'm Mark Imperial, and thanks for joining me.